accounting for lodging industries because it has been discussed over a few weeks. So I just want to cover them in one particular segment, one particular flow, so that it's easy to understand, and we have less confusions related with the usually. So you might have completed, some of you might have completed the course on usually. Let me search template, add a template of hotel. Hmm. Okay, sorry. So we have discussed the uniform system of accounting for lodging industries in our past lectures. So we covered the grand P&L, and then we looked into the departments, right? So the first was the room division department, where the main important talking points for usually requirements is the segmentation. So which you will see on the screen. Revenue is divided into the market segments, and we looked at the definition of market segments. Retail being the normal rates which are available to everyone. Discount means any kind of discounts from the retail. Negotiated being the corporate or negotiated contracts. Qualified means you have to qualify for getting the that kind of rates. Either can be staff, can be senior citizen, can be government employee, can be anything. Then there you have wholesale, which is particularly sold to offline or online travel agents when they buy the bulk room inventory, or they are selling in bulk. And then we see the groups. So the purpose of this segmentation basically is to analyze the room revenue, the hotel room revenue in deeper details, and to understand where the guests are coming from and what type of guests are they. So if they are mostly retail, it means they may be more on leisure, and they may not be booking via the travel agents or anything else, but they are happy to pay the highest price. If they are coming via corporates, mean they may be traveling in groups, or they rely on travel agents to make their bookings, on and they may be coming on predefined itinerary. So it's hardly that you book only a room with a travel agent and nothing else. If you have coming from negotiated, means your business is largely from negotiated contracts, which again defines the type of business that you are going to have. So understanding these market segmentation basically will help you to understand how to enhance your revenue through F&B promotions, through spa promotions, and also to forecast what kind of amenities will be used in the hotel, because all these guests, different type of guests, they have different consumption patterns, different behaviors. So once you understand that the guests are mostly the guests, retail guests, the amenities consumption is high because they are coming for leisure. The discount rate is also there. Similarly, the discount consumption pattern may be higher. maybe they are family guests, so the amenities consumption will be higher, so you may need to stock up. Your power levels will be also different coming from what type of guest you are getting. So usually the housekeeping departments keep a pattern of the consumption by room, right? And sometimes, and then you can on a daily basis, and then you can figure out on that room what type of market segment was staying in that day. So you can consolidate over a month or 2 months. So you have to do this a month, maybe exercise for a month or 2 months for your hotel to understand what are the consumption patterns of different things, maybe the fruits, the fruits, the guest room amenities, bathroom amenities from different market segments in your hotel. And apart from the market segment, there are origins, guest origins means in which country they are coming from. So once you are able to understand that, then it's easy to set up and understand the power levels, the reorder levels of your amenities. So it's important for us to understand the market segmentation, not only from the revenue generation point of view, but also from cost control point of view, and the forecasting and setting up the power levels, the reorder levels of our hotel to better manage the supply chain. So that's the purpose of the market segmentation, and that helps in understanding the market segmentation. Then you have expenses. One of the major cost of the rooms of the hotel is labor. So labor again is divided into details so that we can understand how the labor cost is structured and how is it different from other hotels, and where are the opportunities for hotel to optimize the performance or the productivity. So labor cost again is divided into salary, wages, service charge, contract labor, bonus. So that's salary and wages. Plus the last is the payroll related benefit expenses such as payroll tax, supplemental pay, and employee benefits. So we discuss them in details, what goes in which kind of line. But the important thing here to notice is the breakup of salary, wages into management and non-management. So every department, the director's level, the manager's level will go into the management cost, and the rest will go into non-management. And non-management is divided into further by the functionality of functionality of the associates in that particular department. So for room is front office, guest services, housekeeping, laundry, reservations, transportation, and the complimentary F&B. If that is a separate department or separate peoples handling the complimentary F&B. For F&B department, it will be kitchen, preparations, stewarding. For the administrative and NG, it was for the finance, HR, general support. So these kind of functionalization. So basically, apart from the wages, we also count the headcount, right? So you might have already understand the concept of full-time equivalents headcounts. Even though that information is not coming into the P&L, that information is again necessary for the hotel to understand the productivity in each department. So management, you cannot define the productivity by any standards because their role is not directly related with the production. But the non-management staff, they are directly related with certain production. So the front office will have mostly check-in, check-out, the guest inquiries handled. Guest services would be how many guests they interact with. Housekeeping means how many rooms they clean. Laundry, how many kilo they wash. Reservations, how many calls and emails they handle. Transportation, how many transportation round trips they do from the airport to the hotel. uh, F&B service will be the number of covers served. F&B kitchen will be number of meals served, or number of dishes served. Then you have the stewarding, means the dishes they wash, or the number of covers they serve. Then the other departments will have their own. So the spa, massage done in the individual departments, or the golf lessons they do, or the health club guests they serve. So every department have some kind of productivity, right? Because the activities can be measured, but for management staff, activities are not that easy to measure because they are not directly responsible for the production of services. So that's why the management and non-management is segregated in usually, so that you can agree understand who should be counted in labor productivity report and who should not be. Then you have the concept of full-time equivalent, means the full-time equivalents usually includes the front permanent employees minus the leaves that they are taken, which is going into the deducted from the salary and wages. Then add the contract staff, add the casual staff, and also add the overtime or any extra shift allowance that you are paying. So because they are serving extra hours, right, for that day. So that's the labor cost. So the important is the analyzing of labor cost from management and non-management. Variable and non-variable cost like contract lease is usually variable cost, while the salary and wages is largely fixed unless it includes the casual staff, which you also need to understand separately how much portion is the permanent to the casual labor. And then the other cost, meals, employee benefits, laundry. Sorry, not laundry is not in labor department. Then you have housing and other transportation, ferry, taxes. So all those costs comes into payroll related benefits, payroll related expenses. Some will go into payroll tax if it's mostly the government related transactions, and the other will go into employee benefits when the organization is doing it voluntarily. So other than the labor cost, you have other costs. In each department, we saw different type of cost. In rooms, we see the cleaning commission for groups, complimentary services and gifts is in every department that we saw as a standard. Decorations we saw as a standard in every hotel and every department. Equipment rental is every department. Gas relocation is only in rooms department. Gas supply is in rooms department. Gas transportation is only in rooms department. So every department have some type of certain type of expenses which are common in every department. So you will see cleaning supply, cluster services, contract services, corporate office reimbursable, decorations in every department. Right? We saw in every department, but there are certain expenses which are unique to every particular department, so you need to separate them. Maybe when you are designing your P&L, you can split these two into the department specific and common, like standard cost, so that is established, because the standard cost usually will get as an allocation from the common pool of expenses. For example, decoration you will not be charging specifically for rooms. There may be a department who would be probably handling the decorations, and the cost would be allocated to individual department. Same goes with the printing and stationery. You are buying at bulk space and then you are just ordering as a cost allocation to the actual usage of your department. So you will have the laundry is the same example. So you will have certain costs which are common to every department and which are unique to every department. So the costs which are unique to every department, again you have to understand what are variable costs, means how are they are changing as per the business level. They increase when the business level increase, they decrease when the business level decrease. Then there will be some fixed cost, means they don't change much. They change, but they don't change much when the business changes. So it may be the subscription fees which is paid for a hotel irrespective of occupancies, public area expenses, decoration expenses, public area cleaning. So in the cleaning supplies, you see the line code is combined, right? But the actual cost is not combined. Is not the entire cleaning supplies behavior is not the same. So cleaning supplies include public area cleaning, the lobbies, the front office, and also the guest rooms. So whatever is variable, you need to separate out. So each line can have sub segments, even though in P&L they will combine, but in actual your chart of accounts, you can split them out and see what are the variable cost, you put them in one line code, and what are fixed costs, you put them as a separate account code. So that if anybody asks you to explain the why the costs are not in line with the budget or with the last year when the volumes are changing, you will be able to understand and explain easily that out of the total expenses, how much is fixed because that's fixed and cannot change, and how much is variable and if that has changed or not. So and it is easier for you to do the cost control as well, because you are able to give the insights to the relevant department head to control the cost which can be controlled, right? So that's the idea of accounting. So you have to be very careful in establishing the chart of accounts. So not only you have to have chart of accounts which are in line with the usually, which is you can see on the P&L phase, cleaning supplies, cluster services, commissions, but you need to also think about these sub charts, sub accounts, which will go into the details so that we can get more details of these expenses uh, from the GL itself, rather than when somebody asks, we dig into the GL and we separate the cost out and tell the person separately. That's what I used to do when I was assistant controller. Every month, and I have to dig out the GL and say, split out the cost into the variable, into the fixed, into ad hoc, so that when we are doing the budget next year, we know out of the total expenses that we incurred last year, what was the fixed expense, means we have to do it again, right? So that goes as a separate fix. And then there would be some ad hoc, which means we did just only because there was certain such a situations. So we might say, okay, do we think that in next year we would have similar situations or not? Or we may provide some money every month for these kind of contingencies, right? Plus, we would see what is the variable expense and how does it behave with the occupancy. What is the per occupied room? What is the per guest? And if there is any pattern. So and normally we find the patterns, or we take an average for the whole year and do the budget accordingly, and try to see the pattern in low season, high season, in certain months of when we know the market segmentation has changed. Maybe we have more Chinese guests, or we may have more group peoples. That's why the variable costs are also changing. So when we are analyzing it at the end of the month, once you have done the P&L, you have to understand and relate it with the market segmentation, with the type of gas that you have, and what was fixed, what was variable, and what was ad hoc. So that's the brief process of how you are going to analyze your expenses. So is there any question in expenses, or is there anything else that you want to add or ask in this expense analysis?
No, so I was along the same lines asking a financial controller to help me with a breakdown of the marginal and variable
Hmm.
costs so
Hmm.
that it could help me in pricing.
Yeah.
So we are along the same lines with it, but this is providing a much more deeper perspective.
Uh-huh. Yeah. So did you get those details or not?
No, no, not yet. It's still in process. They're still marking it out and sharing it over. Now that you mention it in this manner, I need to check if it is something that is annually done in
Hmm.
practice, or is it being done ad hoc because I requested for it. So that brings up the question.
Yeah. Well, I can tell you the answer. It's not done usually. It's done on ad hoc basis. I mean, this is how we used to do. But when I realize every month we have to present for the P&L, and our GM is asking for the same details. So what we did is we started to track on a monthly basis. And even we went on more to split the accounts and charge them separately. So whenever we look at the GL, because we couldn't change the software that much, so what we did is we adopted Excel subledgers. So I created the P&L, and then I created a detail under the P&L for each line, and then established what is the variable cost, what are the fixed cost, and what monthly cost, And when I look at the GL, it's very easy for me because I look at it every month. I can spot them like very quickly, what is fixed, and then I demarcate as a fixed line, and then what is the variable and what is ad hoc. So it was giving me a much easier run in the P&L, because I could explain why the expenses are lower or higher. And when I do the budget next year, it's super easy for me because then I have a reference. So this is something I learned in Shangela.
Oh, all right, all right. It sounds like a best practice. I'll look into it if they have something of that sort. Because I do understand we also have software restrictions, as you
Mhm.
mentioned, you had to. Our software is also not that flexible, so I am aware that they are pulling it out into Excel before they need to do any deeper analytics.
Yes, yes, yes. That's usual. But maybe you can advise them to do it on a monthly basis as a standard practice. After the month end close, they can just export the GL and prepare it into the Excel file. Like, it's not that they don't have to prepare Excel file separate for each month. It has to be one file, and then the months are on the column, and then they establish the line of code into the like a GL account codes. Like for example, cleaning, I tell you what how I break down. So in cleaning and supplies, I would say, okay, the total chemical cost, total equipments that we purchase. So because equipments we don't purchase, some equipments we purchase on a regular basis, like brush, pedals, switches, you buy them on a regular basis, so they become consumables. And then you have fixed, we had a fixed contract, so we say okay, fixed contract. And then we had certain times the ad hoc services like window cleaning. Sometimes you have carpet cleaning because of any group has left, so I put them as a separate. So I add the line whenever they happen, so that I know what are the expenses which we are incurring in total. And I always see the total of my expenses matches with the P&L. So I get the details, like, so, but I don't track like every single chemical, because that's not required for us to do. But I normally ask the housekeeper to do it. So we used to ask the housekeeping department, hey, whatever chemicals you are requesting, please keep a detail in an Excel. So I give them a template, how they need to measure. So whatever chemicals they request, they put into the Excel, and then they create a trend analysis. So if I say the this month chemical expenses are per occupied room are higher than the usual, so housekeeping would immediately point out and say, oh, this chemical was required because I we had to do certain cleaning. So we have a tips in the P&L meeting. We were prepared like that everything is ready in our controls, so it's easier to explain. And when we do the budget next year, we know that, oh, this year we may not have to do this kind of cleaning again, so we can ignore it. So we could either reduce the budget, or sometime we increase the budget for next year, because we know we have to do certain things, or the assets are getting older, or we have not done any carpet cleaning last year, so we have to budget in this year. So this way, we could provide much more detailed explanations into the expenses. So these kind of insights are usually required, but is not available at on a tips. That's why the chart of accounts are very important. Some systems allow accounts and then sub accounts like ledger and sub ledger, right? So if the system allows sub ledger, then it's easy to create subledgers within cleaning and supply. You can create separate subledger: cleaning supply chemicals, cleaning supply contracts, cleaning supply materials, like this. So you have the details ready made from the GL itself. If the system is not available like that, then you have no choice but to use Excel.
Yeah, but despite that, even if we get a subledger to further drill down as fixed variable and ad hoc, we would still need to pull it out into Excel, right?
That's right. You still have to put it out in Excel. The only benefit of that is that you just export from the system, that and
Yeah,
you have a line ready made. But in the other case, if you have to do it in by manually, then you have to key in all the information separately. That's the
true.
only benefit. And once you have it available from the download, if in the system, you just download it and calculate the per occupied room or the trend. That becomes easier.
Yeah, sounds like a low hanging fruit to do.
Yeah. That's right. Yeah, so that is the expenses, right? So every department we have discussed have certain of their expenses. Now, the nature of these expenses, whether it's variable or fixed, depends on the hotel. There is no account code in this list which you can say this is fixed, always fixed. It's not always fixed. Nothing is always fixed. Nothing is always variable. It depends on the type of business model. Yes, certain expenses, for example, guest supplies, are largely variable because they depends on how many guests are using it, right? Operating supplies are usually ad hoc because you never know when you have to replace something in the room, because this is mostly the chinaware, glassware, silverware, hair dryer, small things, right, in the hotel that you are using, iron board. So those kind of things are called operating supplies. So those are usually have some patterns. Higher occupancy will lead to higher expenses, lower occupancy will lead to lower expenses, but it's not the universal truth, because higher occupancy may, even let's say you just have a preventive maintenance done in your hotel, so the cost of operating supplies will drastically drop immediately, because you don't have to change everything, because you just have changed them. But if you have not done preventive maintenance for a long time, then the operating supplies will keep on getting higher and higher and higher, because they think they keep on breaking. Even though occupancy is low, you will still have the problem. So it depends on what are the real the facts behind these expenses. So you have to understand how these expenses are built in, right? Decorations are largely fixed because the hotel areas remains fixed unless you are cutting the cost and you decide to change the decoration itself. Then you can make it variable. Otherwise, it's not. Uh, Reservation expenses usually are variable. Training expenses are ad hoc because and planned, but they are planned. So you have a budget, you plan these costs, and then you carry out the expenses. Uh, the uniform costs are also planned because you can plan when you want to change the uniforms. So some cost we always compare per occupied room and with the last year. Certain costs we cannot compare with last year. For example, if they are planned expenses like training, so you cannot compare them with the plans. You have to compare them only with their plans, like with the budget, whether it was budgeted or whether it was forecasted, and whether we are spending it or not, right? So the way how you compare these costs also is need to be understood. Okay. So that's the, so we are not going to go into the details of labor cost, the expenses, and again, and then we also discuss the operating statistics. So every department has got their own statistics. So we have operating metrics in revenue mix, we have in terms of daily rate mix, we have in terms of occupancy mix, in terms of number of occupied rooms. We, even though usually does not specify the guest origin, but usually the marketing services company, market service department or the revenue departments usually will have from the PMS the guest origin, the then source of booking, the business source, and everything, and those kind of details, so that they can understand the revenue better. But market segmentation for room occupancy and ADR is prescribed by usually in this format, so we have to follow that. And then there is usually per occupied room, and so same for F&B, you will have per cover cost, right? And the terms are defined in usually, so we have discussed them in great length. You can refer back to the things. If you have any question, you can ask me now or later. Similarly, F&B department was not segmented by market segment, but by the venue. So whether it's a restaurant, whether it's in-room dining, whether it's banquet, whether it's minibar, and other food revenue. Even menu food revenue is divided into sub outlets, so that we can understand the performance of each and every outlet that we have in the hotel. Hello?
Yes, I think the internet went down.
Yeah, I think my connection was broken. Okay. So where did I lost? I think we were discussing on FNB, right?
Yes, on the operation statistics.
Oh yeah. Okay.
Room
So
statistics.
yeah, so we discussed the operational statistics. So we covered until the room occupancy statistics, I guess.
Yes, yes, that's
Yeah.
right. Yes.
Okay. So we covered until the so we were discussing that usually also prescribe the operational statistics to understand the market segmentation. But apart from what is usually prescribing, the part of financial statements is also the guest residency, where the guests are coming from, how they booked, the business source information, and also the information about the type of the length of stay and the average time of booking period, which are more on the sales information. But that's also part of the monthly financial statements to understand the revenue in deeper details. So those information is not prescribed, but they are important. And the definition are clear in the usually, so that there is no confusion how to calculate that ADR, what is the RevPAR, what constitute in the RevPAR and not. At the moment now, the different hotels are following different standards on the rooms which are closed because of coronavirus, right, because of pandemic. So certain hotels are removing it from their RevPAR, from their available room inventory, and some hotels are keeping them in room inventory, but giving two statistics. One is the RevPAR based on total room, and one is RevPAR based on only open rooms, right? So every hotel is following different pattern, but the definition is clear. If the room is closed seasonally, then you have to remove it. If the room is intentionally closed for renovation for more than 6 months, then it's removed from the inventory. But the pandemic like situations were not built into the usually. So technically, you don't have to remove them unless the hotel is forced to close by legal reasons. Then you can remove it from the available rooms. Otherwise, if you just close the room because you don't have a business and you want to save the cost, those type of closure of rooms are not considered as rooms not available for sale. They are just rooms not used for sales, right? So, but whatever you are doing, you have to be consistent. Then we discuss about the F&B. F&B is also divided into outlet-wise revenue. So venue food revenue means different outlets. So if the hotel has more than one venue, then the room revenue, then the food revenue will be combined for all the venues, and you need to keep a detail separately out of the every venue. So it can be all day dining, can be French, can be Chinese, can be Italian. All type of restaurants will come as venue food. Then you have in-room dining if you are serving and going inside the room, and if you have functions, then that will go to the banquet, conference, and catering food revenue. Minibars nowadays, many hotels are removing minibars, so but we still have it in standard. And then you have other food revenues. So that's the food revenue, and similarly, beverage revenue will be there. And then we discuss about the other type of food and beverage revenue. The important thing here to remember is the definition of food. So as we discussed in the last time, that by usually non-alcoholic non-alcoholic beverage revenue is considered as a food revenue, but certain hotels are not following that. Certain hotels follow the all the beverage types go to beverage, soft drinks, juices, everything go into beverage revenue, but usually requires them to be in food revenue. But important for the hotel is to say, if the revenue is going into into beverage, then the cost also have to go into beverage, not into the food. So you have to ensure that there are enough cost transfers and cost accounting done to ensure that the cost of food is matched with the food revenue, and cost of beverages is matched with the beverage revenue. Not like juices you put into beverage revenue and all the fruits are going into food. So beverage revenue, sorry, the beverage revenue will be higher and the cost will be lower, right? And then you have certain F&B's specific expenses like banquet, Chinaware. We don't saw that in the rooms department because they are not specifically made for rooms division. So again, you can segregate the F&B department specific expenses and other general expenses into two separate sub headings here instead of other expenses. But it's up to you how you want to design your P&L. uh, Here is the same concept goes for the variable and non-variable expenses. So you have to understand what variable is, what expenses are variable for the hotel. Then we saw the F&B department statistics, which are mostly the average check, the number of covers, the revenue by. Sorry, what did I do? I got speed mode. What did I do? Ah, no, web layout. Oh, how do I do it?
The view seems to have changed.
Yeah, that's what I'm thinking. What did I do? I didn't do anything, actually. Again, no. Maybe I have to close it again. Yeah.
So you can go on the right hand side down,
Where?
the right hand side where you can magnify the page.
Yeah, let me look at that. Narrow by
Second option,
print.
print layout. Yeah, print layout. No, no, the right hand side down, right down, where we can magnify the page.
This one.
Yeah,
Ah, is that now? That's
yeah,
okay.
yeah. Okay.
Did I do? Okay. So we were at F&B, right? So the FNB will also have their own operating department statistics, which means we are talking about the revenue, average check, cost of food sales by venue, and then inventory turnover ratios for liquor, wine, draft beer, bottled beer, and other things. And also we have the revenue per available seat and per square feet. So that's usually the hotels does not measure, but these are important metrics to understand the asset management point of view, that we are maximizing every single footage in our hotel. So that's an important definition. And then you have the other metrics such as the revenue and departmental profit statistics by venue. So you may have more than one outlets in the hotel. So you want to understand what is the covers, average check, and the F&B cost for venue, and also the departmental profit percentage. That's important understanding. And then you have meal periods. So the more details you keep in here, the more uh, easier it is to analyze. And these revenue statistics, the statistics reports are usually either available from the POS. If they are not available from POS, usually the income audit department is responsible for keeping these statistics, because they have all the revenue covers, average check information, and POS is they are giving these reports but not in the same format. So they normally keep the details in Excel, and then merge the reports to bring out the information in the standard format. So I hope that is done by the income audit department in your hotels as well, right?
Yes, sir.
Together with the daily reportings, you will see the meal period analysis, or the in the cost board you will see the food and beverage cost statistics report in the cost report. So different departments are maintaining these departments. The job of the chief accountant or financial controller is to review them and pass them into the P&L meetings. Then the different so other operating departments are pretty much the same. So there are a revenue definition for each and every different type of department. The only thing that we discussed last time is the how we select how many departments do we need as an other operating department. You have telephone, you have minibar, you have spa department, you have health club, you have the pool bar. Sorry, pool bar is a F&B. So you have the massage by the pool. You may have different. May have business center. You may have golf course. You may have adventure activities. So which departments are going to be have their own P&L? So it depends on the profitability. Sorry, the nature of the business. The important factor is that if they have their own cost, associated cost, not all costs are allocated, right? And they have somebody to manage the and being responsible for the profit and loss statement or profit of their own department. So if we have cost, which is they have their own cost, like they have their own labor, they have their own pricing strategies, they have their own dedicated space, then there will be considered as a department. Otherwise they have to be merged with the department who is managing them, right? For example, massage by the pool is may not be is maybe a separate revenue center, but it doesn't require to be a separate P&L, because that's usually managed by the spa department. So you will merge the P&L into spa. You will not have spa by the pool, spa in the spa, right? So you will not have two separate P&Ls. Even though they may offer you a deeper details of revenue, but it doesn't require to have a separate P&L. That's the other operating department revenue, and then we discuss about the other ANG. Sorry, this is parking. So they also have their own statistics, means the how many covers they do, how many guests are they doing, what is the average check. But there is no standard format like F&B or the rooms department. So the hotels generally have to have their own format. But you can follow the templates given in the F&B department to prepare the reports if it's required. Uh, and then you have this is the spa, this is the total health club revenue. So I will give you this file so that you have all these standards and operating department statistics for each department and the definition which is going in there, so that you can understand it easily. And then we also discuss about the other operating department, which is ANG. So we discuss about the labor cost and other specific cost which goes in there. These departments, ANG, ANB, the sales and marketing and the IT expenses, does not have their own others more detailed operating statements like other revenue department has, because you just need to analyze the expenses in more detail. So we have covered the explanation of all the line items, so we will not go into the details again. But what we want to discuss today is this. We have discussed the revenue, insurance, and non-operating expenses as well. Sorry, I'm going too fast here. Yeah. So this is the detail of the after the all the departments, they are departmental payroll titles. For each individual department, what goes into rooms management and what is the non-management. So non-management will be front desk, guest services, housekeeping, laundry, reservation, transportation. So you have these in separate attachments. So I will give you this one as well so that you can use it. And then you have the balance sheet. The balance sheet is a standard balance sheet is in any normal accounting standard. You don't have to there's no specific for requirement for hotels except a few things. For example, the house check, like the floats, individual in-house floats. You have in-house floats usually, and then they will be managed into the house banks or house with together with the cash in the bank. And then you usually have the other departments, which is particularly same as any other department. So we are not going to go into the details of this balance sheet now. We will look at them later because we want to discuss the operating statistics first. um, this was the standard P&L for statement of income for hotel, like the grand P&L. Um, just this is for more on a statutory purpose, not for management perspective. There is an operating operator statement, which normally covers the performance of current year with their current budget and last year, and then look at the variance and then the year to date numbers. This is more on the current year and prior, like a statutory filing of the information. And then you have cash flow. Cash flow is we are going to discuss separately. Statement of cash flows. So have you studied the method of two methods of cash flow, direct method and indirect method, or not? You guys know how to make the cash flows?
No, sir.
No, I'm from revenue management, so yeah,
Yeah.
I understand the concept, but haven't had to do this.
Hmm. Yeah, you don't have to do this, but most of the time is done by the chief accountants or the financial controllers. Um, so that there are two methods of cash, right? Cash flow. One is direct method, means we are so before we go into direct and indirect method, the cash flows usually are divided into three activities. One is cash flow from operating activities, another is cash flow from investing activities, and the third is cash flow from financing activities. So, what is the difference between these three? The difference between these three is the first one, cash flow from operating activities, usually shows how did we generate the cash from the business. What was our total collections, what were our total payments, and what was our cash income from from the hotel operations. So if this is positive, means we are doing okay, right? It doesn't mean we are doing great, but it means we are okay. We are not in danger. But if this is negative, which is at the moment is happening, means we have a problem with the sustainability, because a negative cash flow from operations does not survive for a very long time. It has, so means if we are losing cash, we need to get the cash from somewhere. So if we have the negative cash operating cash inflow, we normally have to borrow the cash, and that will go into the financing activities, right? So means cash flow from operating activities, if it's plus, then you have two ways of utilizing this cash. Either you will invest into the business, means you will buy more capital and buy the investments, or you will give it back to the owners. So then you will have debt repayments or dividend payments and everything else. But if the cash flow from operating activity is negative, you hardly will have capex, because you don't have enough money for operations. But you may have some, or you may sell your assets, right? So you may get the cash from investing activities, means you will have your own assets and you're going to sell them off, or you will borrow the money from either the outside companies or from the owners. So that will cash as cash flow from financing activities. So that's the difference. There's a relationship between the three type of activities. One is pure operations, where how we generate or how we lose the money. Then the second is the investing. What are we doing with the money that we have? Are we creating the assets or we are selling the assets? Then the third is how do we raise the money in case we don't have enough? Are we borrowing the money or we are repaying the money to our stakeholders? So that's the difference and the linkage between the three type of activities, right? Now, the cash from the to prepare this type of cash flow from investing activity and financing activity is the same for both the method. There is no difference between a direct method and indirect method. Only the difference will come from cash flow from operating activities, right? Then the cash flow from operating activities, you have two ways of preparing it. One is direct method, which means we are taking on our cash book and say, okay, how much money did we collect from the guest? How much money we paid to the staff? How much money we paid for the expenses? How much money we paid for the interest? And how much money we pay for the taxes? And what were other expenses that we have? That's our operational income. By the way, interest paid in by technical accounting standards goes into the cash flow from financing activities. I don't know why this is in usually is so here, but that's a correction for you. So interest paid or interest received is cash flow from financing activities, not from operating activities. Then there is an indirect method. So the indirect method is uh, we look at the profit and loss statement and we add non-cash items. So what are non-cash items in P&L? Can you tell me? In the profit and loss statement, there are certain items which are non-cash. Means there is an expense, but you didn't pay actual in cash. They are just there because you made an accrual or they are not paid in cash.
Depreciation.
Yes, there is a depreciation. Then there are certain provisions, right? Provision for leave, provision for gratuity. You don't have to pay them now, but you have to charge them to the P&L to calculate the real profit and loss statement of the company. There may be even sales, you sold a group which has not paid the money, but because you already served them, you are required to recognize the income, but you didn't collect the cash, right? So the indirect method basically says you take your net income coming from your profit and loss statement, and add your non-cash items. So net income plus non-cash items means depreciation and amortization, or loss or gain from sale of property, because that belongs to the cash flow from investing activities. And then you will add back the taxes if they are non-cash, you haven't paid them. And then you will increase or you will add back the changes in working capital. So working capital means your accounts receivable. If it's increase, you will reduce, means you were not able to collect the money. If it decrease, means you collected something from the previous time. Inventory increase again means you invested the money into your capital, into your assets. And if you use the inventory, means you utilize that inventory um, to charge into P&L, means you didn't pay for your purchases. So this way, any assets decrease increase will be reduced from the cash flow. Asset decrease will be increased into the cash flow. Other way around, the all your liabilities, if they increase, you will add into the profit into the cash flow. If it decrease, you will reduce from the cash flow, from the net income. Whether net income is profit or whether net income is loss, the calculation will always remain the same way. So that's the only difference between direct and indirect method. The cash flow from investing activities, cash flow from financing activities are calculated the same way in both the methods. There is no difference. Okay.
Yes, noted.
Noted, sir. Yeah.
Okay. And then we had the notes. Notes are generally the of the financial statements. When you see the P&L, there will be a very big summary of all the accounting policies. It's a big thing in accounting policy. So you will see that. Now there are ratio analysis which are done by the by the property by the chief accountants or by the financial controllers for understanding the business. So the ratio analysis is usually we compare to other properties and industry averages, and we also compare with the prior periods and budgets. So every year we are making the budget, right? Every year we do the forecasting. Every 3 months we do the forecasting, reforecast every 3 months, and see whether the budget's performance is in line with the budgeted or in line with the forecast, right? What was and what whether the relationship between the revenue and the expenses is remain same or not. Per occupied room cover is same or not. Per occupied room cost is same or not. Average checks are same. ADRs have changed. So what are the changes? Basically, whether it's the volume has changed or the value has changed. What is changing in the revenue changes, and then the expenses, whether fixed expenses are increasing, variable expenses are increasing, or there are any ad hoc expenses. So usually you will compare those expenses. So we have the details in those things. So the expenses we normally calculate either per occupied room, per available room, percentage of revenue, and total dollars. So if it's variable, we will calculate per occupied room. If it's fixed, you have both. You have normally you compare them by per available room because available rooms remains fixed. So it's easier. Then you have percentage of revenue. Normally, if it's variable, but it's if it's related with the revenue, like with the volume of the business, not with the volume of the business, but the value of the business. For example, commissions. Commissions you don't calculate per occupied room. Commissions you calculate as a percentage to revenue because they are more paid based on revenue, not based on occupied room, right? But it depends on how you pay the commission. If you are paying, let's say, $5 per occupied room, then comparing with the revenue is not going to make sense. You have to compare it with occupied rooms. So it depends on how you pay, how you incur the expenses. You have to understand that before we go into the details. Then there are certain other operating statistics which are available, which are required. For example, utilities. We have to calculate utilities per available room, per occupied room, per total overnight gas, per square feet for electricity, gas, steam, water, sewage, and other things. So utilities have their own operating department statistics that they are required to be calculated. Then you have the labor cost matrix. Labor cost matrix is also by the management and non-management, and then you have in terms of amount and in terms of hours, right? So that's just an example of golf course. There are other departments have their own labor cost statistics. So golf course, parking, other operating departments, A&G, they have their own department statistics. Your hotels are following this or not? My hotel never follow this.
No, so we never follow this also.
Yeah, because these are too much, right?
Much in detail actually.
Yeah, it's too much in detail. No, but we used to start to follow like the FTE. We used to count the FTE. We didn't compare them with the par, but we compare them with the productivity. So we used to identify what would be the productivity of every department, and then we compare our FTEs with the property, and also compare the cost per FTE, so departmental cost per FTE, so that we can compare with other properties in our group and say which property is spending higher on FTE, higher labor cost per FTE. So that will give you an idea that whether the hotel has too much of senior management or too low of senior management, right? So if let's say the average cost is super high, it means you have too many directors. And if the per labor cost per FTE is lower than the other hotels, it means you have less number of directors, but more on the service associate and I mean the supervisory levels, right? So lower level staff that you have more. So these are the other type of statistics that are required by usually, but usually we don't follow them because they are too much in details. Then there are standard ratios, which we are not going to go into the details because they are standard by any accounting standards, not for hotel only. And then you have revenue and expense guide, which we discussed yesterday, that there are details of what goes into revenue line, what goes into the expense line by line item, right? By different type of expenses. So I will pass that on to you so that you can copy this into Excel and do your pivot table or search or whatever you want to do, so that it's easier for you to use. Okay, so that is all about the uniform system of accounting for lodging industries. Now, once since we have finished this, we are going to move on to the other operational aspects of rooms of the hospitality accounting. So the first one we are going to do is next week is the I think the AR accounts receivable. So I guess
Sounds good.
Saf, you have not worked in account receivable, but Venki, have you worked in account receivable department?
Yes, sir. I have been worked.
Okay, so you will have some idea. So you can ask you can think about any question that you want to ask with us so that we have a bit of more interactive session. Okay. So there is no pre-recorded class for these sessions. There will be recorded. We will be doing them live.
Noted, noted. I can think of a few questions that arise in relation
Okay,
to
sir.
revenue management and reservations pertaining to direct bills and ARs.
Yeah, yeah, sure. Definitely, we will be more than happy to discuss them so that we can make the class more interactive and useful for you. So you have to ask questions to make it more useful.
Oh, glad to have the opportunity. My
Yeah.
pleasure.
Okay. Okay. Okay then. Thank you very much for today,
Thank you, sir.
and
Thank
we'll
you very
see you
much.
next week.
Okay, sir. Thank you.
So how is the COVID
Looking
situation?
forward to
Is it now going down? I heard in India is going down.
Yeah, going down or making down. I don't know what.
it.